There's a difference between a company's share price and the value of its business. The majority of the time, these two things are not the same, and we have to get this right from the very beginning. Let's talk about this very recent example that's been in the news. We're going to be talking about Revlon. Revlon is this cosmetics company. It was formed in the 1930s. I think it was really big in the 80s and the 90s, around the time that it was listed on the stock exchange for investors to buy their shares. But what we've seen recently in the news is that Revlon has filed for bankruptcy. And what does this mean? So let's take a look at Revlon's balance sheet. What we see here is that Revlon has $2.4 billion worth of assets and $4.4 billion worth of liabilities. Wow, what this tells us is that even if Revlon is able to sell off all of its assets, sell everything that it owns, right, it still would barely be able to pay back half of what it owes. We see here in the balance sheet that the shareholders' equity is negative $2 billion, which means that there's practically no value in this company to its shareholders. The company is practically worthless. So in theory, based on accounting and based on what we see on the balance sheet, the value of this business should be zero. However, if we look over to the price of Revlon shares, we see a very different picture. Revlon filed for bankruptcy on June 16. At that time, its share price had fallen all the way down to about $1. However, within 3 days of filing bankruptcy, the share price shot up to almost $10. The balance sheet of this company tells us it is insolvent, it's practically worthless. And yet what the chart tells us is that people were willing to pay $8, $9, even as close as $10 for the shares of a company that should be worth zero. What we can learn from this is that price and value can be quite detached from one another. And also, price can be quite detached from reality and from sanity sometimes. Now, the fact that Revlon's share price increased by 8 times over 3 days, it does not change the fact that Revlon is still insolvent, is still headed for bankruptcy. If the managers of this business don't do something soon to try to rectify the situation, then this business is pretty much as good as dead. And if you buy Revlon shares today, there's a very good chance that you're going to lose all your money. So the share price and the business value are two very different things. Price basically tells us what the market is willing to pay for the shares of this particular company, and value is a representation of what the company, the business, is worth. Now, as an investor, our goal is to find good businesses that we can buy and hold for the long term so that they can keep making money for us. It's kind of like looking for a good employee that you will hire for a long term in your company because you know that they will work hard and they will add value and help your business to grow in the long term. If I know that the value of a business is here, even if the share price falls to here, am I gonna panic? Am I gonna sell off all my shares? Well, I wouldn't. In some situations, I might even buy more of these shares because I know that I'm paying this much to get something that's worth this much. The key here is that when investing, we need to learn to determine the value of a business. If you know how much a business is truly worth, then the movement in the share price is less likely to shock you, is less likely to trigger you into making impulsive, emotional decisions. Alright, so that's it for today's video. I think it's a very key topic, especially in the market environment that we're looking at right now. So like, comment, subscribe if you found this to be helpful, and I will see you in the next video.